The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome back here to the Diagnostic Trading Hour. Right now, we got the S&P. It is up 1.25 points. 1 point right now. We got the Russell up 1.3. The Nadex up 22. The Dow in negative territory right now, down 7 points. We got oil currently down $1.60 on the day. We got natural gas is down a little over 1%. We got corn up a point, but we got soybeans are heading on down 12 points on the day right now, nearly 1% down on the day. Euro dollar is currently down a whole 5 pips, 10, 12 pips. It's just sort of ranging right there. Aussie dollar currently down 149, 150 pips on the day. So Aussie dollar really just getting crushed. Looking on over at the pound dollar, it's down 112 pips. And so nice big move right there. We got the dollar CAD is up 31. U.S. franc is up 5. Euro yen, after a big run up, made a pullback and is sort of leveling off at the moment. Currently up 19 pips on the day. Got pound yen down 81 pips. So the yen's definitely dragging it lower right there on the pound yen. But they got the U.S. yen is up 15. Seen a lot of strength in the yen, quite a bit of strength in the dollar as well today. Pound, not so much. So seeing a lot of weakness right now in the pound, New Zealand dollar there. Looking on over at gold. We got gold currently down 5.5 points. We got silver is down nearly 1% on the day. Copper is down nearly 2% on the day at the moment. So massive move, big mover today being copper. And just getting slammed. Copper just closed over on Nadex. Had some great trade setups over there. But we can go through and check out some of the other ones. We have some big news coming out soon. So this is going to be a big week. This is International Fed Funds Week, if you haven't heard. And so mark that on your calendar. You're going to have the UK interest rate. You're going to have the EU interest rate. And, of course, you're going to have the US interest rate. All coming out this week. Coming out tomorrow for a couple of those. And so let's look at what do we got? Well, we got the US ADP non-farm employment report. And so that one's going to come out, and one that we like to trade, that comes out in the morning. And let me pull up a few details on it for you. We'll walk through it. And there's quite a few ways that you can trade this. I like to trade them, of course, over on Nadex. And if you don't have a Nadex account, hop on over to TFNN.com and click on, again, TFNN.com right there, and then click on the Nadex banner on the right side. And once you click on that, click on Log In. To be able to access an account if you have set one up. If you haven't, you just go to Trading, go to Demo Account, and fill in the form. The username, first name, last name, phone number, password. Hit Apply for Demo, and you'll be able to get access to that right away. They send you an email with a password, and you're in. To get a live account, only $100 to fund a live account. No day trading requirements like stocks. You don't have to have 25 grand in there. And like I said, it starts really low, only $100 funding requirement. So, I mean, most people, of course, easily put more in, but you can go from start to fund. It takes about 5 minutes. And you can do trades like on the news, like I talk about each day. You can do these premium collection trades. And so like for the news, we have the ADP non-farm payroll report. That's coming out tomorrow. The expectation on that is 179,000. Okay? And it's a pretty crazy release. It's how do I put this? It's really a release based on future trend. And there could be some decent moves on it. It's not the best one, I would say, out of the group. So the NFP on Friday is really going to be more of our favorite on this. And I'm sort of just looking across the boards for the NFP. You can look at some trades, but the bigger move is going to be the 830 move. We're going to go into that in a second. But the move on this, I mean, you're talking the only pair that hits a 50% average move. Okay, I'm sorry, 50 pip move. More than 50% of the time is euro dollar. So which is sort of surprising, right? You'd think it'd hit it more. But it's really the only one that actually exceeds that often. Now, the range, the average range, so this is, I want to put this together for you. only 54% of the time does the euro dollar break 50 pips from high to low on this report. So from when it comes out, when it's by itself, okay? However, the range is 60 pips, meaning when it breaks it, it really breaks it, okay? I can go over to other pairs, like only 41% of the time on the dollar franc does it break 50 pips. But the range is 55. Well, how could you have 41% of the time it only breaks 50, but have a higher average move? Well, that's because you may have like 100 pips or 150 pips. That brings that average up. Now, the one with the lowest range is the U.S. yen. It actually, 2 hours after the announcement, it only breaks 50 pips 17% of the time. And the range is usually only 44 pips. So it's very, very small range, and very rarely does it ever break 50, and even its range is less than 50. So that's like a trade that you could, look at butterflying as one example. Now, you do have to take into account that at the same time, okay, we have other reports coming out. All right, so like right in that same time there, because we're going to have what? We're going to have the GDP and everything else coming out with it. Okay, so we're going to have the U.S. GDP, we're going to have the Canadian GDP coming out at the same time. And so last time this report came out, we didn't have that. The time before that, we did not have those reports coming out at 8:30. So that average range, the higher numbers on that range, are most likely due to when the GDP comes out at the same time on the report. So whenever you're pulling these stats, you got to look at what else came up on those big moves. Like, was there something consistent that made a big difference? And so one of those things that obviously could consistently make a big difference would be the GDP numbers. And so if I open those up, we'll look at those. And the cool thing is we're getting them on Canada and we're getting them on the U.S. at the same time. Okay? So on the U.S., we're actually right here. The U.S. GDP is the advanced GDP, and usually has a pretty nice release. Usually it'll pop, pull back, and then go again. And we get a lot of moves that are big. Now, the U.S. yen still has a very low volatility on this release, even with the GDP in effect. And I'm looking at both the U.S. and the Canada GDPs all combined. It still has just really low numbers. Okay? Still like 17% of the time, breaks 50 pips. Average move, 44 pips. So the U.S. yen, one of the strategies I talk about sometimes is doing what I call a strangled or straddled butterfly. And, some of these fun names for different types of trades that you can do out there. And what it is where you go in and you do a premium collection, a range-bound premium collection strategy going into the news, and that can make money if that, like, say, the U.S. yen stays pretty flat, okay? But then you do a straddle or a strangle where you buy an upper spread and sell a lower spread, or buy an upper binary and sell a lower binary on one that moves a lot. So like the euro dollar, 71% of the time breaks 50 pips. Same thing on the pound dollar. But the pound dollar on average moves 70 pips. So it has a bigger average move, and it usually breaks 50 pips. So you could go in and you could do a butterfly on the U.S. yen, and you could do a strangle or a straddle on, say, the pound dollar or euro dollar. But pound dollar has that bigger move and more consistently hits it. So that, that's one way to play that, but basically going in and butterflying the U.S. yen and straddling or strangling the pound dollar. And so there's sort of a cool way to play the trade. And hopefully that helps you out. Let's go ahead and look at a couple other things. Let me pull them up right here. And let's see if we got any potential trades here for our lunchtime hour. And maybe do a couple premium collections. It's been a little bit of a crazy day, crazy morning. And, that's always an interesting week when you got Fed Funds Week, right? So let's see what we have going on here. And I'll pull the scanner up for you. You can log into that right there. We in a diagnostic box spread scanner subscription there. And, of course, we're not using the box spreads on the premium collection, even though you can. I'm working on building a feature in for that. We're using the binary scanner. And right here on the binary scanner, I'll go in and I'll choose, like, gold and silver. And then I'll put, 65 and 95. I've set my risk reward needs to be at 0. Okay, if you put it at 1, it'll filter everything out because remember we're doing premium collection. All right. So, and then I'll bring this on down so I don't see a whole bunch of stuff I don't need to, like, say, the next 30 minutes here. And now it shows me what, if any, trades may qualify, and there may be none. And if you're like, there's nothing showing up, well, to make sure it's working, just hit reset filters. All of a sudden, you'll see a bunch of stuff. And then all of a sudden, I realize, there's nothing between that range. So it is working. And then I'll go back in, and I'll just bring it down. And then I'll reset this right here. 65, 95. And the reason I use that, I'm not going in and taking trades for like 95 or 65, but I do want to sort of have a little bit of a, I hate it when they, like, let's say I'll buy one for $75. I don't want it to like hop on and off the screen because it's fluctuating in price. So it's sort of just so I can keep them there, keep them, make them easy to keep my eye on. And so, okay, so now we do have one. So one's popped up. We got one on gold that we can potentially look at doing. And right here, this is a sell gold for $13.25 trade that we can look at. And so pull that up. And so I got that one on the screen here. And that, let's see, that one barely shows up. Notice how like it disappeared off the screen? Because now it's like $35.50, which means it's a $64.50 risk. So that's why it's not showing on the screen. So I could even, if I wanted to keep that one up, I could just change this to, I could even make it 60 if I wanted to. And then, there it is again. So it has this popping in and out. Right now, gold is trending. It looks like it has some down pressure on it, but it's trending up at the moment. So I'd be very hesitant to hop in on this trade right now. But we do have, we have 12 minutes. So we'll see if gold decides to turn around for us. And we might be able to, pull some trades off on it. And right now, looking on it, I'm not too gung-ho just yet. But we got about 5 ticks, which that is my minimum, is 5 ticks. And really that 5 ticks is like a sort of a 5-minute, So you add on more minutes, probably need to add on more ticks. All right, so right now we're 7 minutes away, so you may want, like, say, 7 ticks away from the market if you're going to take the trade. And let's see, the market right now is like at 1324.5, and this one is a sell at 1325. So now the market a lot of times will go in and do a little pullback right at the end. So it's not necessarily always just a bad trade there. I just want to make sure I have all the little pieces lining up for me. And if we do, then we'll have a great trade. But it's right now it's still just pushing up. We sort of got a little, like I said, pullback. If you look at a 1-minute chart, you can see that pullback a little bit right there. And I saw a little bit on market noise. I saw it pulling back. So on the 5 minutes though, you definitely clearly easily see the uptrend. And we'll talk more about it when we get back from this break. All right, stay right there.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we'll come back here to the Diagnostic Trading Hour. And so, like I said, we had that 13.25. Gold popped on down short. Able to hop in that one. We'll see if it stays on below 13.25. And so got in there, got filled at $26. And what does that mean? Well, that means my max profit on the trade, $26. Okay. And sold 10 contracts. So that'll be a $260 profit. Takes about 5 to 10 minutes on the trade, and then it's done. Now, if it does go back up, if it hits 13.25. I need to get out, okay? And I'll get out right around $50. And the way that I do that is I will actually click on, to leave this up for you, I'll leave it up there, but I click on the buy side because I sold it, right? And then I put in, and I get my ticket ready, like say 60, 65, whatever. And I'll have my ticket ready to buy it back if I need to. Because if it hits it, you got to bail. And, it's a volatile instrument, so it can easily fly back. I don't mind taking a $25 hit. I don't want to take a $75 hit. It's not a big deal to take a $25 one. So, but if it does get up there, you need to be looking to get out. And let's see here. Let me look at this. Yep, there we go. Okay, so it's getting really close. And so if it does, then we'll just hit the button and we'll move on. So it looks like we're right on the strike. If it now sell is at or below. Okay, so don't forget that. With the sell, you do have the advantage of at or below. And but if it so in this case, I would actually make money if it expired at 13.25. But if it doesn't, then I gotta get out of the trade. And so in this case, I gotta get out of it. And just you bail on it. You move on, and you're done. You're out. Next trade. So do this. I did this almost every single day on the show. I try to, and because one thing you want to do is you want to get good at one market, be consistent on one market, and by consistently exiting that way, then you'll be able to go in and be more profitable as a trader, because you won't be constantly how do I put this? Like if you're just constantly jumping markets from market to market to market and different times and putting all those pieces together, it can be a little bit difficult to really, I guess, pull off the kind of trades that you're looking for, because you get good at one market, but each market behaves a little bit differently. Okay, and gold can be great. The markets have been a little bit. I will tell you, this week has been a little bit rougher than normal on the EPC trades because the markets have really been volatile. So if you're in that trade, you should have been out right around 55. And but anyway, so that's basically that's how the trade works. Okay, but hopefully you're following the rules on those trades. You're taking advantage of them, and you're learning them, and of course demo trading them. And let's see here. I'm trying to put this other chart up for you. That might work if I can do it that way. All right, so. Let's see here. I want to pull up. What I'm trying to do is pull up the binary chart for you, and I want to let you see how this works when you do it this way. Right here, if I go in and pull up one more second here, and I'll bring it on the screen because it's sort of interesting to see the price action, how the price moves on these, and that's what I want to show you. But it's going to get to pop up correctly. And first time, second time. See, the third time's a charm. If it'll open up for me, then I can bring the binary chart up. Okay. All right. So right over here, we got basically the trade. So I'm going to go in. I'm just going to make this like the mid price just to make it easier. Okay. And so what you can see is the price of the binary, as and you can actually go back and you can look at it since it started trading like last night and see where it was at, where's the market at in relation to it, and basically look at how the price fluctuates. And this can be really helpful when you line it up with the chart to see the impact and to see really how volatile these instruments can be, because there's a lot of cool ways to trade them. Like right here, you can see this thing went from 70 to 20, back up to 70, back down to 20. It's back up to 60, going back on down. So there's a lot of cool ways that you can trade these. And if you learn how to do it correctly, then, you can really clean up. But the volatility is huge. And so, anyways, check that out. And we'll be back. I'll go into a little more detail for you after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, so welcome on back here to the Diagnostic Trading Hour, and I got something that's really important to explain to you, okay, regarding this. Let's say you're in the trade, you're going short, and you're looking to buy back out of the trade. Okay, you're like, it's at my strike, I want to get out. In the last 2 minutes, the market maker is going to pull their quotes. Okay? And so the only quotes you're going to get are other traders' quotes, which usually isn't, like in the last 2 minutes, there's not going to be that many trades. And so let's say you go in and you sold the 13.25 gold contract. But then you're like, oh, wow, it just hit 13.25. I want to get out. And you're in the last 2 minutes, and you put an order in to buy back at 55. Okay? Then your buy order is going to become a sell order for 55. Now, another trader may take that for you. So that could be good because it could lessen your losses. Okay? But let's say they don't take it for you right away, and it's sitting there. And then gold dropped to 1324.2 like in the last 30 seconds. Then you have I'll sell an in-the-money binary with 30 seconds to go for $55 order out there. And basically somebody would be a fool not to take your order from you. Okay? Because if it's at 1324, 1324.5, and you tell me you'll sell that to me for $55 profit with only 30 seconds to go, I'm going to take it. And so this is sort of a, when you're managing your exits, if you see that trade get to where it's in the money, you may decide to go ahead and cancel that order, okay? Simply because otherwise you may be giving somebody money by doing that, and you don't want to do that. And I saw that just happen. That's why I'm telling you that. Is people go in and they'll weave their order in the last, few seconds or whatever. And so I always teach that 2-minute warning bell. It's like, if you're not out, you're in, basically till the end. And yeah, you could leave an order in there and somebody might be stupid and take it. But if you leave it on there and then that trade goes in the money, and now you're profitable basically on the trade, or you will be if it expires there, and you leave that on there, now you're the one that's sort of, giving somebody else the money. So just be really careful on that. It's basically just, I hope that makes sense. But what I'm trying to say is, if I sell this at $13.25 and gold drops below $13.25, I don't want to have an order to buy it anywhere. If there's like 30 seconds or a minute or 2 minutes to go. Now, if it goes above $13.25, yeah, I would want to have an order to buy it. So let's think, would I want to buy this based on where gold's at right now? Well, if gold's above $13.25, yes. If gold's below $13.25, no. Okay? So I hope that helps you a little bit, just putting those pieces together. It's a really important tip. And I see it happen now and then. I see people make mistakes like that. And people are going to take your orders. So I've known traders who have just got creamed because they've made mistakes like that. It's very simple mistakes. And that's why I always tell people, too, to trade these in demo, figure them out, learn them. But that 2-minute warning bell thing is something you got to understand, that when liquidity drops, your buy becomes somebody else's sell. And if that's a guaranteed profit for them, and I don't mean like guaranteed, but I mean you got 10 to 30 seconds on the clock, and you have an order in that will let somebody be profitable if they take your order, if the market doesn't do anything like in the next 10 seconds, that's close to a guarantee, okay? I know we're always cautious about using those, words in our business, and I'm still cautious about it too. But I'm just telling you, if you give me a trade where the market can do nothing, stay flat or move down, and I can make more than I can lose on the trade, and I have a higher probability of winning the trade, that's my risk reward is good, and my probability is good, and I only have 30 seconds where that could go against me, I'm taking it. Okay? So don't be the guy that gives it to me. And as Nadex grows more and more and more, that's going to be there. So I want to help you all out. I don't want you to be, this is like any market. I don't want you to be the blood that gets eaten up by the sharks. And so I'm really trying to help you on this. If you pick up what I'm saying, if not, go back and watch the archive of this show. But again, just ask yourself, when you have an order out there, would I want this trade in the next 2 minutes, if gold expired or whatever market expired where it was right now, would I still want to be a buyer of this? If gold is below $13.25, I would not want to be a buyer. Therefore, I would not want to have a buy to exit order in. Okay? And because somebody is going to be smart and they're going to go, wow, you mean I can buy that from you for, I can sell it to you and you'll buy it from me for 55? And yeah, I'll take that. Okay? So just, it's a little intricacy, but you definitely want to learn it and learn it well before you take big contracts. Because I feel bad for people when that happens to them. And it's just you're just not getting how to put those pieces together. Okay? And I even put out warnings and alerts. And I'm like, hey, you need to make sure you know what you're doing when you do this. And trade, demo. When you get that down, trade small. Just like any other kind of, trade out there. So, I hope that makes sense to you. But if not, archive, email me, whatever. But I just don't want you to get eaten up by it. Okay? Let's check out. We got some other news coming up this week, right? So let's look at what other news. I'll throw the deviations up here on the screen for you as well. These come every day. And you can access them. So the S&P, the Dow, the NASDAQ, the Russell, oil, natural gas, copper, gold, silver, corn, soybeans, Aussie dollar, euro dollar, pound dollar, US yen, US franc, and US CAD. And a little trick for you, okay? And we're working on adding this in on the website, but I just want to teach this to you so that way you know how to do it, because I had a trader asking about this, is, hey, I trade the euro yen. I want to know how to get the euro yen deviation levels. Well, let me show you. It's pretty simple, okay? And it's just how FX works. That's why this works. You go in and just highlight them, copy them, okay? Go over here and then paste the levels, and I deleted out the non-Euro dollar US yen. So I left everything but Euro dollar and US yen into Excel. And then I simply put, in this case, like B2 times B3, because I put the labels on there, B2 times B3. Euro dollar times dollar yen is Euro yen. And so by putting those together, I actually come up with the deviation levels on the day. And makes it pretty simple, makes it easy. And it's a very simple way to add in the cross currencies. We're adding in that feature where we're going to add in like Euro yen, Aussie yen, Euro pound, on down the list. We're going to put all the different ones together and have all those different deviation levels. But that's how you do it. And it's, at first I was like, is this just theory or is this right? And I went through the difficulty of extracting it from these non-major currency pairs. And I was like, wow, yeah, that's exactly right. So, and then just, that's how FX foreign exchange works when you're converting from one currency to another. So, let's see. All right. We got that, and we already talked about the GDP plan, so we got that piece in place. We also are going to have a little thing called the U.S. FOMC interest rate decision. That one's coming out, right? This is an interesting one. So, because it's not just the interest, but it's all the stuff that comes out together, and it comes out like crazy, okay? But the stats we get on it are going to be, let's see here, got them up. Euro dollar 96% of the time breaks 50 pips. That's good. The average move is 73 pips. Aussie dollar 75% of the time. Pound dollar 83% of the time break 50 pips. So Euro dollar and pound dollar both move over 70 pips. Your Euro dollars are like your best trade if you can find a good straddle or strangle. Now the other pairs you have like dollar CAD, dollar franc. Those are they only move like 50 pips like 50% of the time. US yen, the weakest mover of the group, 31% of the time moves 50. 33% of the time moves 50 pips, and the range is 50 on it. So it's not really one that I'd want to butterfly. I mean, unless you can find a thick 50-pip butterfly. But remember, range is high to low after news. Okay, so it's not 25 up, 25 down from news. It's high to low. So that probably would be one I'd want to avoid on butterfly. Now, what about into the news? I did this last time. It was pretty intense. I don't know if I'm going to do that on air completely again, because that was hardcore. Because I did like 5 or 6 butterflies at the same time live, and they all worked, so it was pretty sweet. But and then I went in and I straddled pound dollar like in the last like 10 seconds. And that one worked as well, but or strangled it. But going into the news, you can also do butterflies into the news. Okay, and so this is sort of like your big Wednesday thing. Is you can go in and like 30 minutes before the news, the Aussie dollar on I mean, think about it. Think about when you traded FOMC on FOMC day. What happens like half an hour before the news? Everything just goes quiet, right? So it just gets really, really calm. Well, you can make money on that, okay? So if you go in and you do like Aussie dollar, it only moves 13 pips 30 minutes before the news. Euro dollar 19, pound dollar 21, US CAD 16, US yen 16. Okay, so Aussie dollar is actually the smallest mover before the news. And you can go over, you look at, let's say, an hour before the news. We got like 22 to 25 pips on the Aussie dollar. We got, let's see, other ones that are that small. Then we go up to dollar yen's like 26 pips. 90 minutes before, you got like 29 pips on the dollar yen, like 26 pips on the Aussie dollar. So, you get all these stats together, you start gathering them. We got, let's see, the dollar CAD, we got 16 pips before the news, 30 minutes before, 25 pips, 60 minutes before the news on the dollar CAD, 29 pips, 90 minutes before the news. And here's how you play this. You go over here to the binary scanner, okay? And you go in, you put, say, 60 to 95. And then you find your currency pair that you want to do. So let's say we're looking at Aussie dollar maybe dollar CAD, and dollar yen. Those are, say, the three smallest movers. Now, you could also look at all of them just to see what's there, because you may have trades that qualify. And you want trades that expire, we'll say, in the next 90 minutes, because that's all that we have stats for. Okay? And what you're looking for, and it's sort of cool, if I go, okay, well, 90 minutes before the news, like this one expires in about an hour and 15 minutes, so that's about 90 minutes. 90 minutes before the news, on the Aussie dollar, it usually moves about 26 pips. So I can use simulator range. I can go here and go, well, what would 26 pips be? From where it is, we'll just say right now. Okay? It'll automatically tell me what that is. That's 9030 and 9082. Okay? So I could go in and I could sell this one, basically 79, that's pretty close to 9080. And 9082, there's a, let's see here, 9035. Yeah, so you got one, basically I got one for 15, one for 10. I can go in and do that trade. Now, there'll be more premium because we just had the GDP come out, so that's going to pump premium into the options throughout the day. FOMC's coming out, all right? But you'll want to choose the one, you want to get in like 90 minutes before, or at least start looking at 90, 60, 30 minutes before the 2 o'clock expiration. So you want to be hopping on there like around 12:30, 1 o'clock, 1:30 for these butterflies going in, and you can hop in there and you can put these things on. They're going to expire at 2 o'clock because that's when, you know, the FOMC rate and the statement comes out is at 2 o'clock. So they expire when the news comes out. So they expire, news comes out, then volatility happens. So what you're doing is you're playing that range-bound strategy. If it will stay like within like 26 pips, I can bring in this profit. And you can even go in and you can go, well, I like the one on the short side, not the one on the long side. You could go in and buy the 85, let it go up, you know, maybe sell the higher one. If you do both of them, you're sort of doing sort of an iron condor, so you got a little bit of risk hedge on there. Also, I mean, they'll get a little bit volatile. So you could go in and you could put maybe like $10 or $15 on the other side and just let it, some volatility maybe fill you on the other side, let it work it. But, you know, you definitely want to get that range. But if you can get that range on, it's pretty cool. And, I mean, again, you can do it at 90 minutes, 60 minutes, 30 minutes, and go in and just knock them out one after the other. And, I don't know, it's one of my favorite trades because it is one of the usually most consistently quiet times. So it's a great time to do butterflies, and then it just explodes afterwards in who knows what direction. And so I'll go in and I'll do like usually pound or euro on the string or straddle like right before the news. And I mean, it thing usually on average moves 70 pips, so it can easily move more than that. Just the FX stuff with all the stuff going on with Japan and with you know, Europe, and of course obviously here with the U.S. They're trying to figure out when do they scale back QE, and we got, you know, all the rumors coming out of who's going to be the next, you know, head of the FOMC and all that stuff. So there's a lot of unknown factors that add to the volatility, and you can even see that one sort of fluctuating. We've seen it like at 6 and back up at 8 now, and it's calculating all this stuff live for you. So it's pretty sweet, and it'll help you out. But this makes this trade easy, and that's just one pair. So that's the Aussie dollar. I can go down here and I can also look at dollar yen. I can do the same thing. You know, dollar yen on average moves, you know, how far? Let's see, 60 minutes before the news moves 26 pips. So I'll just simulate a range, and then I'll put in, you know, 0.26. Click OK, and then it'll show me, you know, which ones actually fill in that range. All right, stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here to the Diagnostic Trading Hour, and we're going through how to set up this FOMC for trades. So we'll do this again more in detail tomorrow. I just want you to sit down, play with this tonight. Pull up the demo account, pull up the spread scanner. You can get access to for free over on TFNN and Diagnostic membership there, and go in, and we have a free trial. But you can try out this binary scanner. You can see how it works. You can put the pieces together, and you can watch some of the videos. You can rewatch the archive from today, and just practice it on like some 7 o'clock or 11 o'clock expirations. And don't even worry about win or loss. Just practice doing it. See, like, okay, did I win or did I not win? Why did I win or why did I lose? And be able to answer those questions, right? Know how to put the trades in. And, of course, you can ask questions in the help desk, and I'll be glad to help you out directly as well. And but this is, it's pretty cool. You get this new stuff down, and it's timed. When it's going to happen, what it's going to happen on. You put the stats together, and it really becomes a very powerful thing that you can utilize. So, anyways, I hope you learn to take advantage of these pieces and put them together. And let's go ahead and do just a quick wrap-up. We'll check out where a few of the markets are currently sitting at, okay? And so let me open up a couple charts over here on this screen. And I know I got to give it just a second to push on over. And make sure you can see it all. All right. So we got the Aussie dollar right now, and it looks like it's moving on down. Let me load my template up here where I've drawn everything on. Makes life a lot easier. And, well, now that's freezing. Okay, well, hold on one second. We got the Aussie dollar. It's down right now, and we have the deviation levels, and I'll show you that, which is pretty cool because you can actually pull them up, like I said, directly in the Diagnostic Tools website. And if I can just get it to move for me. Sorry about that. All right. And so when you pull those up, you'll actually be able to see the levels directly on the screen. And so we got, let's see, Aussie dollar is currently at 55. And so if you go directly to the deviation level page, I'll show you where that is over here. One second, let me open that one up. Make sure it stays on top. Okay. And right here, you go to the deviation levels, or you can also access this from the scanners. Okay. And you go, okay, we're at 90.55 right now. So I go down here to Aussie dollar, and that tells me, on that currency pair, the live price, 2 o'clock, and we are way down. So we're down almost, we're past 2 deviations. So it's a massive move. And of course, that was from the, a lot of that happened obviously last night. So right here, that's really not a standard move. But, I mean, you can tell it happened at 2,300. But came out pretty much when RBA governor spoke. I did not expect at all that kind of movement. But what he said, and this is why I said, hey, be aware of this, is because he comes out, he saw some major challenges. And he saw the mining boom that's been happening over in Australia as waning. And so he went out and he laid out conditions and all that stuff. There's a story over on Bloomberg that goes into it in a little more detail. But, I mean, it's really set up some great Aussie trades. And it was one of those, like, be aware trades. But massive move right there. We got a full solid 2 deviation move out of it. And anyways, check it out. And if you have any questions, let me know. Y'all have a great day. We'll see you here next time. Stay tuned for another great show.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.